Hello YouTube, Salivate Metal here, and it is a record day again. It seems like just yesterday when the Dow broke 21,000, breaking previous records. Well, now it's up again, 22,000. And what's behind this? What's going on? We remember the days of quantitative easing 1, 2, and 3, and and how during the course of that time some $85 billion has been injected into the Wall Street, causing these major spikes during the Obama administration, and it's been going up really ever since. So many people's 401ks and retirement accounts and the like are really very happy at the moment. And obviously, someone like me who really doesn't dabble in this area a whole lot, I'm losing out, it looks like, it appears. In fact, in 2013, I cashed out an IRA I had from a previous job and bought gold and silver. And I lost big time during that move. And every time we see the stock market continue to go up like this, it's a constant reminder that I came out not so well in that situation. And but the thing is I'm not upset about it, because I know that what I hold in my hands, what I acquired in trade for that money is, I know where it is, I know what it is, and I know its history, and I know that in the end, it's probably a better move in the long run. But so far, this has been a long run for the Dow Jones Industrial Average. And what is causing it now? Because as most of us know, the Federal Reserve has been raising interest rates, and they've been doing quantitative tightening. Now, people say that QE3 is over, and really, for all intents and purposes, it's not. They're still printing and digitizing money. It's just it's tightened up a bit. They're doing a little less of it. But I still think there is a little bit of flood and liquidity in the markets with all this cash that they've digitized, and that's mainly what's going on these days. They're just creating it out of thin air, and I think that's what has why so many people have been attracted to the digital cryptocurrencies, especially Bitcoin, because there's a hard limit on that at 21 million, I believe. But now with this new fork, who knows what that's going to be? Does that mean that Bitcoin Cash is going to stay with the 21 million, and the new Bitcoin segment will have an open-ended, or will they split it? Who knows? It's hard to say. But nonetheless, the stock market is seeing 22,000 in the Dow Jones Industrial Average for the 300 top companies. And this time, it's piggybacking on top of that already inflated, super inflated stock market. And but this time it's due to the confidence, consumer confidence, sales reports coming in from large companies like Apple and others, unexpected good news in the sales of items and business reports and the like. So this is actually real, but it's a real bump in the stock market on top of a bubble that's artificial. And in any event, that bubble will still burst. And in fact, it'll burst just the same, no matter if it's artificial or not, because there's only so much that it can take. It's just where is how strong is the balloon, so to speak. That's really the question. And because something's got to give somewhere, somehow and in some way. We're getting ready to push for another debt ceiling increase, and almost everybody in Washington, including Donald Trump, is for it, because he wants to spend money, almost $1 trillion on infrastructure. And yes, that will stimulate the economy too if it's done right. When it was tried before, the American Community Reinvestment Act of 2009, most of that money was given to unions, and very little of it was actually used to do any good. And so nonetheless, it's quite interesting to see this. And then, the next question is what about the dollar index? The dollar index is still kind of low. It's still sliding down a little bit and creeping back up and down a little bit there. It's right now at 92.87. And so you have good news upon stagnant news. The dollar, confidence in the dollar is as such. And I think that's part and parcel because of what we're seeing with the quantitative actions that are still occurring by the Federal Reserve. And of course, these interest rate hikes are nominal at best. It's all, in my opinion, they're so little, but it provides the psychological effect of euphoria in the markets, and everybody's acting. Everybody wants good news, and to the point where they're creating it, all but creating it. So, and of course, what does this do to gold and silver? Well, the prices are staying pretty stagnant at the point right now. Silver's, trading a little less. Gold as well. Platinum, surprisingly, has gone up slightly. But nonetheless, that's where we stand with the precious metals. And that's okay. If the economy genuinely is healthy and does well, precious metals will probably continue to drop or stabilize, at least to a point. And really, that's what we want. We want them because gold and silver are an insurance. They're simply a hedge for economic instability. But in reality, gold and silver really are undervalued, in my opinion. And in a perfect world, gold and silver should be higher than they are now, no matter the economic conditions. And if the economic conditions worsen, then they will go up and attain their true value. Yes, there's some manipulation in all things, really, in any kind of market, precious metals or otherwise, the Dow Jones Industrial Average, and the like, and a dollar index, all kinds of things that are going on. But that's to be expected. But there's a lot of natural forces at play, and I believe the natural forces that are at play are greater than the manipulative forces. And so we shall see how this will all play out. But it's quite a news day for sure to see the Dow Jones Industrial Average go as high as it has, and where things are going. And with gold and silver, steady on, stack on. Acquire as much as you can. That's what I'm doing. And for me, I'm not interested in investing in the stock market when it's this high, because more than likely the chances of it going higher are less than it going down, in my opinion, especially and notably higher. It may stabilize. It may stay at this level for quite a while. It could go up a little bit more. But even if I were to get in at 21,000, depending on what stocks you buy, you're not making a whole lot of money with an entry point at its high. The old saying, buy low, sell high. Well, all you can do right now is watch it and kick yourself for not getting in, way back 10 years ago. Let's look at the 10-year chart. If I would have gotten in 10 years ago, in 2009 or what have you, then maybe I should have done that. But hindsight's always 20/20, they say. So I hope you enjoyed this video. I'd like to extend the multitude of gratitude y'all for watching, and encourage you to please rate, comment, and subscribe.